Phil, Charles, good morning. How are you? Give me a second. Right, let's see. Contact manager. Okay, let's start. Brad, good morning. Raymond, good morning. Phil, Todd. All right, let's start. Welcome to Tradespoon in Yellowtown. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options. This is my brief bio for those of you who are new. Welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. I was Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab. At some point, the company was worth over $2 billion. Very proud of that experience. I want to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing it for over 15 years. Mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Please read them. If you're new to trading stock and options, I encourage you to visit optionsclearing.com to understand the risk associated with trading stocks and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right. So let's review main concepts of trading psychology and kind of pillars of successful trading. One is the economy of control. The idea is process versus outcome, concentrating on the process as opposed to an outcome, right? Sometimes you're on the right side of the trade, sometimes you're not, but as long as you have process and you're following the process and you basically derive satisfaction from the process, more so than from outcome, that I think is very important, right? So it's very important to have a trading plan and not be fixated on what your account value is, but be fixated on the process. Process to me is how much cash do you have in your account. I propose to have 50% of cash if you think hard landing, 30% cash if you think soft landing. Still think no more than 4 positions, 2.5% maximum exposure. Again, if you're on the wrong side of the trade, you have 4 positions, and maximum loss per position is 2.5%. Your portfolio drawdown is 10%. If you have 8 positions and you have 5% drawdown, or maximum loss per position 5%, that's 40%. And market is going to be volatile, right? We have this pendulum swings to extremes on the downside, pendulum swings to extremes on the upside. And when this pendulum swings and you're on the wrong side of the trade, you want to contain your drawdown to no more than 10%. Negative visualization is important. Before you get into a trade, we are minutes away from the, not minutes away, but a couple hours away, right? So 1 p.m. Central, 2 p.m. Eastern, we're going to have Fed chair. First fund rate, I don't think there'll be a surprise, but then the press conference at 2:30. And that could be, you know, I don't know if there's going to be a surprise. Assumption is 25 basis points, and Fed is going to remain hawkish. And they're basically going to say we're not lowering interest rates this year. How the market is going to react, I don't know, right? That's kind of the elephant in the room. Market is overbought, but at the same time, they're not going to say anything new. So it could be kind of a volatile couple of days where market can go down and then go up, can go up and then go down. It just will depend. We do have PMI data and ISM data. Again, market has been reacting because these, you know, we have, there's definitely a change of narrative where everybody was concerned about inflation last year. This year, the narrative is changing. Everybody's concerned with recession, right? So if there is a signs that there is no recession, right, the full employment, you know, good retail numbers, you know, employment cost index going down, you know, then people are buying. But if there is a negative news like PMI data or CPI data comes back, then, you know, market could react to that at some point, right? The idea of glass of half full or glass half empty, right? So the important part is this third game theory, right? The game theory basically says out of all the market participants who believe that we are in soft landing and who believes in hard landing. Right now, clearly more people believe in soft landing, right? If you're in hard landing, you are a minority, right? You're less than 50% because the market is, you know, up 20% and Nasdaq is up 11 this month. At some point, the weights might shift based on the data, right? The more, you know, people look at the half empty glass, then it will shift over the hard landing. But right now, more people look at glass half full, right? So more people are shifting towards soft landing. So this data is important. We are in contraction for a few data points that could start the volatility. 9:45 Eastern, that's 8:45 in the next 20 minutes. And then we have a Fed. So I think the line in the sand right now between bulls and bears is 400 and 410, right? 410 is December high, right? That's the resistance number 1. This is support number 1. I propose don't react on 1 day worth of data. We have today announcement, then Thursday reaction, and then Friday unemployment data. If Friday after close we're here, then bulls are in control and we're heading toward 430, right? Friday, Monday. If we break 400 and we trade in here, right? Then we're heading towards probably, you know, January low, right? Around 380. So in terms of risk versus reward, I mean, you have 25 points to the downside. And I think you have 25 points to the upside in the next, you know, months or so. Or could be till May. We could be trading in this range between 430 and 380 going into the May, right? That's probably the core scenario. So if we do approach 430, you can consider going short, 380, consider going long, 380, 390. these are all good support levels. Support 2, support 3. And I would just watch, right? Right now, market obviously is overbought. You're in the middle of range. It's a flip of a coin. But if we get to 430, I would consider going short. If we get above 410, maybe you can add on to your bullish position. But to go long, I would wait for the breakout of 410, right? Because I don't know if we're going to break this level. Just depends on the data. We do also have earnings from Amazon and Facebook, Meta, Google and Apple, so that also can spark volatility. And that's how I would approach. So stop losses on the short position, I would consider R1, right? So my goal, if I do see by Monday we are above 410, 415, 416, I'm going to close all my March bear hedges. June hedges, I still have time. I still think this is just a matter of time. From the hard landing narrative, I still believe, core scenario Fed is not going to lower interest rate this year, and at 5% interest rates, Q1 and Q2 earnings are going to continue to decelerate. So the Q4, they were okay. The bar was set low, but in Q2 and Q3, the bar is not set low enough, right? The bar is not set low enough, and then market pulls back. Again, timing these recessions, timing the market rally and sell-off proves very difficult, right? It proves very difficult. So that's kind of my take on the market, and going to soft landing, hard landing narrative of what to expect after. I do expect a lot of volatility. Market is extremely overbought, so I do expect spike in VIX. Going into the event, obviously bulls are in control. We are almost approaching December high, or we already at December high. Close to December high. 410 is December high. So that would be my take. AMD is up. In terms of earnings, AMD is up 5.5%. So I have to watch this trade. I have 86 call, right? I have 86 call and 64 put. So let's watch that. $6 away. It's still out of the money, right? It's considerably out of the money, but we have to watch and put in order to try to close it. In terms of earnings, Snap, again, disappointing news, down 12%, was down as much as 15%. Match.com is down 8%. Electronic Arts down 10%. WDC, perfect example of volatility, was down, I think, like almost 10%. Now it's flat. So again, there is a lot of volatility in these earnings. Let's look. AMD. Wait, what did I do? Okay. Okay, so short put. Let's close the short put. I don't really want to have. Ideally, I mean, I would not hold it after the announcement. So short put, I'm going to close. Take the profit on short put. That's worth 2 cents. Right, because the results can be unpredictable. Right now, I can actually close the short call and break even on the short call. So overall profitable trade. We'll manage it. Let me put 10 cents. Buy to close for 10 cents. See if it can drop some volatility. Probably not. They're probably not going to drop volatility because of the Fed meeting. So it might be just, but there could be a larger reversal, so we'll see. But the goal is before the end of the day to close, not before the end of the day, before I go to lunch. So I'm going to lunch at 12 p.m., right? I'm going to go run. So before 12 p.m., Chicago time, 1 p.m. Eastern, I want to be out of this trade. Right, so short put, I made money. Short call for now, breaking even. And AMD is slightly pulling back. Snap. Looks like recovering. WTC down, electronic arts are down. Going into anticipation, again, at least going into the event that yield, everybody's talking about this yield inversion, right? So it's reaching extreme level, 18 plus 53, 60, 71, 72 points, basis points, so very high yield inversion, but yields are down across the curve with the expectation that Fed is not going to say anything new, right? They're not going to say anything new, 25 basis points, then they're going to pause, March, April, May, they pause, and then that's it. And then, inflation doesn't come back. So anticipation rates are down, below 3.5. TLT is up, dollar is slightly down, QQQ slightly down, Spider slightly down. Kind of wait and see, right? Everybody's waiting and kind of see what happened next. That goes down. General Motors. Let me know if you guys have any questions. So in 8 minutes, we'll have ISM data. We'll watch for that. So AMD continues to go higher. So I'm watching AMD for now. Snap. All right, any questions? Yaroslav, good morning. Fred. IWM, the bullish trade. So yeah, I think right now I would be market neutral, right? We're in the middle of the range. We can get to 430. We can go to 380. It's a flip of a coin from my perspective. I mean, obviously I'm bearish and I think it's going to go down, but that's a lot of it is probably self-serving bias. I'm looking at the glass half empty. People who look at the glass half full, they think that we're going to go to 430. In either case, we're in the middle of that range. I would, for every bullish position, I have bearish position, right? If the market drops to 380, I would close out a lot of my bearish March position, and if it goes to 430, I would close out my bullish position. IWM is flat. Thank you, Fred. Bob, present. Forecast 2-point spiders high. Yes. Model doesn't know about Fed. It doesn't know about half glass, half full, half empty. It doesn't know about the glass. All it knows is about price action and volume. And based on the price action, it's soft landing camp is winning, right? Bob switched to soft landing. He was right. So for now, soft landing is winning, right? You can't really argue with that. And that's what the model shows you. Potentially, in the next 10 days, depending on the outcome of the Fed, we could get to 417, 418, basically break the 410 level. So if things remain the way they are, and there's no negative surprise in ISM data, or there's no negative surprise in the Fed, right? In terms of market, not the data, but the way market participants react to those data, we are heading higher. The passive list resistance is heading higher. That's what the model says, right? And that's kind of unequivocal, right? It doesn't have bias, right? It's not like every morning I tweak it to reflect my bias. This is just, looks at the price action. It's always the same. So, and so far it's been right? It'll take at least 3 data for this model to revert back. That's why I always say, let's say we end up today down 2%, don't assume that the vector is going to be negative, or model and traders have to at least digest 2 to 3 data points before you can confirm the trend change, right? This is extremely important going into events like this. Otherwise, you might have whipsaws, right? But injury, right? So just remember, today we will have, what do you call it, whip. So something like this, right? So that's usually what happens after the Fed decision, and then Wednesday and Thursday, right? Data comes out, boom, one flash and then the other. So you don't want to close, you don't want to do a lot of portfolio, you want to do portfolio rebalancing now, right? Look at your data, look at how bullish you are, how bearish, adjust. And then when market starts, the announcement stops, then you want to avoid this, right? Because that's what usually happens. Especially Friday, we have unemployment data. So we probably, any big portfolio changes, I would do it either Friday towards the close, or probably Monday is even better. All right, we're 2 minutes away from the ISM data. Let me turn on TV just to watch what happens.
Download the Thumbtack app and start caring for your home today.
Yeah. Meanwhile, AMD continues to go higher. Another leg up. We have a CD decision tomorrow. So QQQ Spider slightly negative, JP Morgan slightly down, Apple slightly down. Pfizer continues to trade lower. So for now, I'm watching AMD. Let's see what we have. So PMI final is 945, and then ISM manufacturing index. 10 a.m. 2 data points. You held above 400 for 3 or 4 days, we're probably going higher. But yeah, I mean, if we did hold above 400, we did go higher. So it's the same idea, right? So we broke through the 400, it opens up the door for 410, basically, right? 408, 410, that's December high. So it's the same thing, right? If we stay 2 to 3 days above 410, it opens the door to 430, right? But just because we're above 400, or even if we're above 430, that doesn't change the narrative in terms of soft landing and hard landing, right? But yes, 2-3 days above 400, now we're at 408. 2-3 days above 410, we're going to be at 430. $41 strike on General Motors. Yeah, I did close it. Let me just see if I got filled it. I downsized my position significantly. I still have 41 call. I guess I'm waiting for the ISM data. See what kind of reaction there is to the ISM data. Peloton is up on earnings. Okay. Nice. I mean, stocks that got destroyed, went from 150 to 14. Any positive news, they go higher. Snap, didn't really have any positive news, so it's lower. And AMD continues to grind higher. All right, ISM Global Manufacturing, 46.9 versus 46.2 prior. So positive surprise. It's still in contraction. It's not a great data, but it's higher than the last months. All right, so let's see how the market reacts to that. For now, kind of, I guess people saying, so what? They're shrugging it off. Okay. Okay. How quickly does this get updated? Not yet, but okay. So PMI data is in, and for now, market kind of not sure what to do with it, or just people are waiting for the Fed decision. too far, too fast, would you place a put at the money or out of the money? Scott, I mean, if you're bearish on Tesla, did you do at the money? Or I would do a spread, right? Spread is better because I would buy maybe 180 put and sell 140 put, right? Something along those lines. But at least the short put is giving you a hedge because Tesla is going to move together with the market. I don't think if the market is going to be up 2%, Tesla is not going to be down 2%. So if you bearish on Tesla, I would do a spread because these options are pretty volatile. If you're not comfortable trading options, you just want to buy a put, sure. But I would give yourself more time, maybe go to June, right? March is too early. I think March market is going to continue going higher. But June probably, we'll have more ISM data. At some point, people will realize, well, if manufacturing service data is contracting 3-4 quarters in a row, we're probably in recession, right? But it's just right now, not enough people believe in that. But at some point, I think more and more people will believe in that, and that's when Tesla sells off. So if I buy, I would buy into September. If you are a short-term trader, Scott, and you're just waiting for this overhead resistance, yeah, you can buy weekly put, 2 weeks out, 1 week out. I would still do a spread. If you're not comfortable straight, I would do single put, and then tight stop order, right? If we trade above 181, day 1, day 2, you probably want to get out of that trade. Does Asian graph look like to drop to 58? AstraZeneca, didn't they have earnings today? No, 8 days. I mean, it does look bearish, right? It does look bearish. It does look kind of overdone, right? The idea is why is healthcare is selling off? Why is utilities selling off? Because not everybody, but more than half of the traders believe in soft landing. So they were hiding money in utilities, consumer staples, and healthcare, and now they're saying, let's buy Nvidia, Bitcoin, and Tesla, right? So money are rotating back into high beta stocks, and that's what January looks like. The question is this what February is going to look like, right? So I think money is going to rotate back out from high beta back into consumer staples and healthcare. And I think stocks like Pfizer are overdone, right? They're overdone on the downside, right? So, I mean, I don't look specifically in AstraZeneca. I think they could be an exception, right? But my idea, they're overdone, and I think money will start rotating back into safety. SMH is up today, leading. There is no earning. Oh, AMD, right? SMH is up because AMD. AMD had, decent earnings, better than, Intel, for example. So yes, this is. I have match.com put. I need to close. Okay, match.com. How's General Motors? I'm gonna stay in the same. So I'm watching General Motors, right? The 41 call, and I am watching AMD 86 call. AMD 86 call. Spiders turning flat, right? QQQ flat. Semis are up on AMD news. What else is interesting? China is back up 2% after a few days of pullback. Energy is down. Everything else is waiting for the Fed. Everything else is waiting for the Fed. How the interest rates? Let's look at TLT. TLT is slightly down, but interests were down. Doing reversal. A little divergence. Okay, fine. Oh yeah, they're back higher, 348. Okay, so interest rates reversed back higher. So interest rate did react to ISM, right? Worse than expected, ISM. The idea the Fed is going to stay hawkish longer. So interest rates back up after the ISM data. All right, let's review the rest of the position and see if we want to make any adjustments. Talk about AMD, trying to close the short call before the 12 p.m. That's my cutoff. Russell 2000, I trimmed the call spread, have an order to exit out the calls. March puts, ideally, if we drop 5%, close March puts. That's my kind of future rehearsal exercise. June, I'll leave alone. NOC, best case scenario is building the bottom. Yeah, it looks like it's building the bottom, right? It's at least for not making any new lows since January 19. It did briefly, but it's trading at the same level. So 2 weeks, okay, it looks like it's building the bottom. All the negative news already factored in. The money is rotating back into a group. Well, you look at the price action, right? You look at the price action. If you look at the value stock, right? Value stocks basically didn't go anywhere since November 9, right? Flat line. So all these, energy names, material names, there are exceptions like home builders, Leonardo at 52-week high, right? Like who would have thought that Leonardo is going to be at 52-week high, right? It's 2022 high, right? Even though nobody's buying houses, nobody's selling houses. Everybody says we're in housing recession, but Leonardo's 52-week high. So you have that irrational exuberance in some of these names. So there are exceptions, right? Individual stocks might be doing better in these times than others, but overall, the value stocks haven't done anything basically since August, right? The August high, we're back to the same level, right? So that means that money are not, we did sell off, and then here for the past, since November, we're at the same level. We're QQQ, from the lows, from November, from the lows, we're continue to go higher, right? So since, from January, December low, we went from 52-week low to basically almost September highs, right? Almost to September highs. So QQQ had a very strong rally since the beginning of this year, and value stocks since the beginning of this year, they basically flat, right? Slightly high, maybe 1 or 2%. So what does it tell me? It tells me that the money are floating away from the value stocks, specifically consumer staples, utilities, healthcare, right? Why is healthcare selling off? Right, because money managers basically, it peaked in December, right? Here, and now it dropped. Why did it drop? Is healthcare now in recession? No, it's just people were hiding in healthcare, and now they're like, okay, let's start buying Bitcoin. How do you buy Bitcoin? Well, you have to sell your healthcare, right? Or Tesla or Nvidia. So money are rotating, right? If healthcare is down, that means the appetite for the risk is increasing. Housing stocks, big boost from earnings. Yes. So they're not doing as bad as everybody anticipated. And home builders, very strong rally. I do agree. Okay, let's see what else is brewing. Let's see, AMD. Okay, so let's review the rest. So 9 o'clock, I think we have the final data, right? ISM manufacturing index, ISM manufacturing index, okay. All right, so we talked about NOC, QQQ. Probably my largest bearish position is in QQQ. So QQQ, I mean, from technical perspective, it's December high, right? If it breaks through December high, which is 300 level, so if it breaks above 300 level, 305 level, then it opens the door to over 333, right? Another 10% up. So it could be where we are at 330 in a month or so. If not, then it will revert back. So I would watch that. So these are all bearish position. I mean, June, I'm not worried about. March, they are going against me, so I have to make a decision. SH, this is if you're not comfortable hedging using options, then another way to hedge is buying SH. I'm gonna hold on to SH. It doesn't have expiration, so I have time. TLT could be volatile after the Fed, right? It's all interest rate sensitive, but again, looks like the only consensus we have is that if soft landing agree with hard landing, that interest rates are going lower eventually. They're just for different reasons, right? Soft landing thinks it's because inflation is contained and there's no reason for the Fed will pivot and we're in soft landing. Hard landing thinks that we will lower interest rate because we'll be in recession Q1, Q2 of this year, and Fed will be forced to lower interest rates because unemployment is going to tick up, right, to whatever, 4.5%, 5%. Okay, so continue to buy on pullbacks. And again, the risk to the TLT story, if we have inflation come back, right? Like in Italy and Spain this week, inflation data went back. One data point is not enough, but if it's going to be a pattern in the next couple of months where inflation data is not going down and actually either not going down or going up, well, the Fed will come out and say, okay, great, we need to, instead of 5% terminal rate, it will be 6%. Then TLT will sell off, right? But eventually, I think in a year from now, TLT should be a lot higher than it is now, whether it's a recession or soft landing. And biotech, bullish biotech, trying to wait to see if it breaks out. ISM drops to lowest level since May 2020. Okay, so factories, same thing, dropped to the lowest level. Kind of no news that's been the pattern for the past few months, and market doesn't care. Maybe a little bit, not a lot. Not a lot. All right. AMD definitely doesn't care. Actually going higher. Okay. Add to QQQ bearish position. I personally not gonna add to QQQ bearish position because I'm already over leveraged in bearish. I want to close my bearish. So I would look at your portfolio, right? When QQQ were up yesterday, what is it up? 1%, 1.5%. You look at your portfolio. If you are down 1%, 0.5%, maybe that's when you add to QQQ puts, right? Protect yourself on the downside. But if your portfolio is down more than 1%, when QQQ is up 1%, I would just wait, right? Because we don't know which way the market is going to go, right? We really don't know. Yeah, so ISM actually dropped significantly from 45 to 42. So pretty big contraction in factory orders. But, market doesn't care, which is very interesting. Okay. Market, yeah, so it's half full, right? Market doesn't look at half empty glass, like ISM and manufacturing data. It looks at half full, right? Europe is, Germany is in expansion, China is reopening, so, this eventually ISM will get back up, right? So slightly lower manufacturing index, slightly lower this. Okay, great. Yes, some manufacturing gauge drops. Okay, great. Okay. Okay, let's carry on with our analysis. XLF, again, same story. June, I'm not worried about, at least not yet. XLF March, I am. So just have to wait and see what happens this week. XLF is sensitive to interest rates, so I guess a little bit more price action in XLF after the manufacturing data. ISM, right? Big drop. Let's see, did interest rates moved? Interest rates are moving too, right? So continue this rise in interest rates with the idea that, okay, Fed will stay hawkish longer, right? They're going to stay hawkish longer. So interest rate big reversal from 3.45 this morning to 3.50, right? Interest rates move like Tesla stocks. All right. What is happening? General Motors actually reversed lower. Okay, can I close my short call? Okay. So it looks like a little pullback in the market. Let's watch AMD. Any questions? 50-day moving average presented resistance before your thoughts. Fred, which index? 50-day, traditional technical indicators on indexes are very important, right? So We are trading above 50-day moving average. We are trading above 200-day moving average on QQQ. That's very positive, right? Especially with spiders actually a crossover, right? Everybody is talking about, you turn on news, everybody says, 50-day moving, we are trading above 200, we are trading above 50, we are trading above downtrend, and we are reversing. This usually, 65, 70% of the time means that there is a continuation to the upside, right? So from technical setup, there should be a continuation, and market should continue rally, assuming there is no negative information, right? ISM kind of, again, does have empty, half full glass on all the macroeconomic data. We'll see if it's the same reaction to the Fed, right? Usually it's don't fight the Fed, but right now, basically, everybody's kind of ignoring the Fed. So, okay, we'll see how long it's going to last. Latest consolidation. Silver is, again, the most popular trade. Everybody talks about silver. It's a dollar play, right? So dollar drops significantly, and this is why value stocks rally significantly. And housing stock, right? Because 30-year mortgage was 7.5, now it's 6.25. If you're in soft landing camp, yes, you buy silver. If you're in hard landing camp, yes, you buy silver, just not yet, because we'll see after the Fed which way. We're right at the 50% retracement, right? It's a line in the sand. We've been here, since December, slightly higher, slightly lower. But it looks like we are trading in this box, right? We're trading in this box since November. We're either going to break down, right, on a soft landing narrative, or on a hard landing we go up. So I would wait for the silver. I mean, you can start accumulating because eventually I think it will go higher, just like interest rates, right? My view is the same, So, but I would not buy aggressively. I would use dollar cost average. Job jolts up. Okay. Yeah, so it looks like market kind of just says we don't care about manufacturing data. Okay. 41 calls now. Am I out of General Motors? I'm getting close. I mean, they're profitable, right? Puts were profitable, so close the puts. Calls are actually breaking even. Definitely before 12 p.m. I would close it. Definitely before 12 p.m. Yeah, I did. The rally dropped. For now, I'm waiting on GM calls. The market is kind of looking for direction, right? So it looks for direction. This was yesterday high, so I would wait for yesterday high. If we do break above yesterday high, I would close General Motors and AMD, these short calls, because we're probably going to get to 408. But as long as we're staying below yesterday's high, and with this manufacturing data not as good as everybody anticipated, then maybe a little pullback is in order. Okay, I did close my MPC puts out of that. Okay, so General Motors. So General Motors calls and AMD calls. That's what we're watching. 41 call. I did close General Motors call and Tradespoon account. So sorry, maybe we're confusing because I have my personal account and I have, Tradespoon Yellowtown account. So the 41 call I did close yesterday, right? So yesterday I'm out of the 41 call. So I misspoke because I did buy the stock at 39.08 and I closed at 39.26. So I made 20 cents, right? Or 24 cents. So I made 24 cents on General Motors stock, but option I closed flat. So if you're still holding on to General Motors calls, yeah, I mean, I would just close them if you see a breakout in spiders. Right now, the top is 406.43. What did the model say? The stop is 407.49. So yeah, if it's 407.49, 406.48, I would break down. I would close. But for now, it looks like it's losing momentum, right? Spiders is losing momentum. $41 call, you can close for 16 cents now. So it's trading at 16 cents. You can close it for 16 cents, and that's the cost basis I think we got. Did we? 41 call. Oh, we got 10 cents. Okay. So you can close now, and still going to be a profitable trade because of the put and the stop. TJ, do I still think we'll test the lows? I assume you're referring to 52-week lows. Yes. The question is when. So I'm still pretty confident. I have a strong opinion that Fed will stay in restrictive environment. They're not going to pivot this year, right? The soft landing makes assumption that Fed will pivot this year. I'm going with the hard landing narrative that they will not pivot. As long as they don't pivot this year, that means it's just a matter of time. Q4, Q1 earnings, Q2 earnings, but at some point there will be a big deceleration in earnings, kind of like Microsoft. Microsoft is up after the earnings, but they're lower single digit, and multiple of 26 is probably not warranted. And it's probably going to get worse in Q1, and it'll probably get worse in Q2 as long as Fed does not pivot. So I think this level will be retested. I thought it would be in March. I'm changing my opinion. It doesn't look like it's going to be in March, right? Unless there's some kind of new information in the market. Fed is not going to be new information, right? Fed is going to say what they said in the past 12 months. And kind of everybody's ignoring that. So not everybody, but the soft landing camp. Majority of traders ignoring that right now. So then that means we're pushing into April, right? Next time Microsoft announces earnings, it will be April, right? Until then, it's kind of, the hope is that it'll be a soft landing. So it's just a matter of time. Fred 50-day on QQQ, well, yeah, but we're above 50-day, we're confronting 200-day. So we're above 200-day for at least 4 days, which is very positive for the market. Gold GDX, same as silver. I think dollar does the rally. So I would buy it, but in small amounts and use dollar cost average. Carol, what my take in Caterpillar? Again, it's extremely overbought. It had negative earnings. It's going lower, right? Eventually, right? I mean, by June, it's going lower. if the market is going to rally, Caterpillar is one of the darlings, right? It just has such an incredible rally. It's such a big part of China reopening theme that even if the earnings are not great, people are going to look behind that, right? Glass half full. So it's going to move with the market, right? It will move with the market. So if spiders are going to be down, Caterpillar is going to be down. If spider is going to be up, Caterpillar is going to be up. Will it break through this level? Probably not, if I have to guess. Maybe slightly. So I think there is a little room to the upside in Caterpillar. I think eventually we will retest 170 this year, right? I think Caterpillar will be at 170 before the end of the year. Whether it's going to be in March or in June or in October, time will tell. Fred, yeah, I mean, you get money market funds, you get 4.5%. So the most popular trade are bonds, any form of that, whether it's CDs, money market funds, or some of these funds like I put in Vanguard funds, let them manage it. And maturity is what's important, right? If you think inflation is going to come back and Fed has to go higher, then you probably want to stay in CDs, right? And short-dated bonds, because the interest rate is going hard. This is very unpopular opinion, at least as of right now, and that's not my opinion. That would be only if the Fed makes a mistake, right? If Fed comes out at 1 p.m. and says, guys, we're the winners, right? The inflation is a loser. We're going to lower interest rate by the end of the year. That would be considered a mistake by a lot of the bond traders, and initially bond would drop, and then most likely inflation will come back, right? We already seen it in Italy and France or Spain, or I think all three of them actually. Inflation is back up, and then we have repeat of 70s and 80s. At that point, then the 10-year and 5-10-year will sell off. So it just depends your view on the Fed. As long as Fed stays hawkish and interest rates are at 5%, I think the best thing is to put 5 and 10, because at some point the short term, there will be yield revert to normal. 2-year will drop significantly, and a lot more than 10-year, and 10-year will drop too. So you want to kind of and the rates will drop. So you want to lock yourself in getting 4.5%. Like my goal is in 401k to lock myself getting 4 or 5% interest rates for the next 10 years, right? Because I think this is an opportunity of a lifetime. We're not going to be at 5%, 10 years from now. We'll be jumping between 2 and 5. So I want to be locked. So I'm going into duration. Some people will disagree because they're concerned that inflation will come back. I agree with that. So again, you can use dollar cost average. But whether it's 5, 10, 2, I think the path of least resistance is higher. It's just the question of time. TJ, thanks. Trade management, Fred, thank you. Gold, RJ, same thing. It's a dollar story. Dollar is extremely oversold, right? Usually these patterns don't finish like this, right? Usually, right? It's a very strong, kind of 1, 2, very strong 3, right? 4 Elliott waves and 5, right? So according to Elliott waves and according to hard landing, there is a 5 coming, right? That 5 is coming, right? It's not just kind of, it's not a Bed Bath and Beyond, right? It's not a Bed Bath and Beyond stock. There is usually continuation. So if there is a continuation, silver and gold will sell off, right? If there is no continuation, silver will continue going and rallying. How big is this rebound? A lot of core hard landing say will be at 114 or higher. So then silver and gold will sell off. So to mitigate that, I would use dollar cost average. Put 30% of your gold position now, and if it dollar jumps to 114, you put a little bit more. All right, it's 9:24. You guys have been awesome. Thank you very much. I'll see you. Scott will do the closing bell. I will see you tomorrow morning on YouTube. Thank you for participating on YouTube. Again, please consider joining our YouTube sessions. We do have live trading room. Everybody, thank you. We have 10 people watching. Love it. Almost 1,000 subscribers. Please hit like. If you're watching the video and you like the video, you think it helps you trading, it will probably help other traders. It will help Tradespoon, grow our community. So please share it on social media or blog or forum, anywhere you're participating. Don't trade alone. Participate. You get different thought processes, different trade ideas, and hopefully it will help you. 240 to 90 to 25 markets. Thank you, Fred. So, yes, everybody's adjusting prices because they missed earnings. It's kind of the usual. But thank you for letting me know. Thank you, Fred. I do believe in Elliott waves. Because you have to realize the stock forecast toolbox, it's not Elliott waves per se, but it's using the wave technology, right? It looks at wave modelings, right? Market moves as waves. It's just sometimes it's periodic, sometimes it's non-periodic. Periodic, it's easier to identify. Non-periodic, random, not so easy. Todd, thank you. Phil, thank you. Have a great day. Yaroslav, thank you. TJ, thank you. Thanks a lot, everybody. I'll see you tomorrow morning. Tomorrow morning, please close your short options that was weekly expirations. I would consider closing because you just don't know. Market can be up 5% or it could be down 5%. So with the short weekly options like AMD and General Motors, I would close them, by 12 o'clock Central. Up, down, doesn't matter. Just I would consider closing them. All right. Thank you very much and have a great day.